Hi guys, welcome back. We're gonna be reviewing now the 8th of April 2024 for the ICT Silverbullet entries according to the Mentorship 2022. So we're gonna start with looking at the charts for that day and reviewing the calendar. So let's see if Monday the 8th of April there were, as you can see here, no news, which means then that we can be trading the 3 sessions of the Silverbullet for Monday 8th of April. Let's set up now our vertical lines for our trading times. I usually like to set it up by hand, but if you don't like to set it up by hand, feel free to use the Silverbullet times indicator that you can find here. It's the ICT Silverbullet vertical lines by Fahmi Eshak. He's a student of mine and he did a great job with this indicator. But if you don't want to use any indicators at all, feel free to always set them up with vertical lines that you can just quickly add yourself. Okay, perfect. And this is for Monday. So we have the 3 Silverbullet times that go from 3 to 4 a.m. New York local time, from 10 to 11 a.m. New York local time, and from 2 until 3 New York local time in the afternoon. So let's play quickly the price movements. Beautiful. Okay, let's start with the 1-day time frame because this is Monday. So if we take away all the chartings that I've done on the 1-day time frame, we can see and observe the price movements. So looking not at Monday the 8th, but actually at the previous day, we can see that the price has not gone higher than the previous high, which was formed on Thursday, 4th of April, which tells us that considering that the price actually went lower, so what would be our expectation for that day? Well, we can see that the price formed this high and this low, and then the day after, which was Friday, the price actually did not form a new high, which we were kind of expecting, but formed a new low. So in this case, we are not sure about the candle of Monday. We're gonna let it run and keep an open mind. Now let's go on the 1-hour time frame. And by looking at the price movements in the 1-hour time frame, let's try to observe the biggest fair value gaps and the bigger liquidity levels. So as in terms of fair value gap, we have a fair value gap here and a fair value gap here. We can put them together and these fair value gaps got actually touched. I'm gonna just add fair value gap on the 1-hour time frame, and here we have actually another one in which the price is currently still hanging in. Remember, this is a CB and this is a BZ. Now, in terms of liquidity levels, what do we have here? We have this liquidity level here, which is going to be our buy side liquidity. We have our liquidity level here. As you can see, I'm going to assign this level, this consequent encroachment, this level that regards the fair value gap on the 1-hour time frame. And it's kind of like in the middle. You see the price really touched the middle of this fair value gap and then come back and retrace into this fair value gap. After we sign the fair value gap and the liquidity levels, it's time to actually go on a lower time frame and start with the chartings for this specific day. So for the 8th of April 2024. So what do we have here? Let's take a moment and let's check what are you guys observing here. Feel free to pause the video for a moment. Sign down your liquidity levels, sign down your fair value gaps on the 50 minutes time frame. And just look at the price movements. What is the price trying to tell us? And when you're ready, let's compare notes. So here we have a previous high, which I'm going to sign with this level, the consequent encroachment. for the buy side, and it's not the perfect consecutive encroachment, which probably would be kind of here, but I like to sign it closer to the 0. So, and we have a buy side liquidity level, pretty precise one, with these 4 candles. Then we have this fair value gap on the 15 minutes time frame, and we have these 2 fair value gap consequent one after the other that are still active, but the price has tapped back into them, so let's keep that in mind. What about our 8th of April? What can we observe here? We have here our buy side liquidity level of that specific day, and we have here our sell side liquidity level. So our sell side before 2:30 was actually this level here that then got taken out. So we had here a sell side liquidity level formed earlier, and then we have the new sell side liquidity level, which would be here. And this is on the 15 minutes time frame. We can observe that the price movements after the opening at midnight went lower, touched this level, which is on the 15 minutes time frame of the fair value gap, so the lower end of this fair value gap on the 1 hour time frame, retraced back, touched back into this 15 minutes time frame fair value gap, formed a new level of buy side liquidity, because remember we had buy side liquidity here, and then the new level formed at 2 AM, and then after that the price started going lower, forming this big bearish candle and forming the new level of sell side liquidity. And now it looks like the price is going higher on the 15 minutes time frame. Okay, so we are in the 15 minutes time frame. Let's go on the 5 minutes time frame now. Always keeping in mind and checking for the price, for the movement of the price. So here on the 5 minutes time frame we actually have a fair value gap that the price is balancing right now, and also touched back into this fair value gap. The price took out buy side liquidity, went lower, touched back into the fair value gap formed, and now we're gonna see what the price wants to do. In the meantime, as the price was going lower, took out this level here, as you can see, and formed a new low with a new sell side liquidity level. So, okay guys, so on the 5 minutes time frame we have just seen the price taking out sell side liquidity, and I want to remind you now that our time to trade it's about to start. What we want to see is price forming out sell side liquidity, going and taking out this level, forming a new low, going up in this move. Up here the price forms displacement, a fair value gap, and takes out a previous level, such as a previous high. Now let's see if that actually happens during our trading time and if something interesting could be happening here. So I'm gonna go on the 3 minutes time frame and slowly play the price movements. Ooh, okay, look at it here. So on the 3 minutes time frame, the price took out previous sell side liquidity level, took out a previous high, formed a fair value gap here, as you can see, and now it's tapping back into this fair value gap. Take a moment and tell me what would you do. So the trade, if we enter it, would look like long, so it would look like something like this. This is the next level. This would be our stop loss. So from here exactly it would be a 2.38 risk to reward ratio trade. Would you take this trade? Yes or no, and why? Yes guys, write down in the comments below your answer. Take a moment, stop the video. Would you enter this trade? Yes, and no, why? I want to tell you what I would do, and I want to tell you my reasoning behind it. So reasons to actually not enter a trade, which are always important, is that the price first took out buy side liquidity, then went lower, and in the same movement took out sell side liquidity. So for sell side liquidity, you see we had it here, new level, retraced back, took it out again, now it's going higher, and now it's retracing. So this movement in which the price takes out buy side liquidity and then takes out sell side liquidity is not really my favorite. I've noticed through time that when I take trades like this to go actually long after the price is taken buy side liquidity and sell side liquidity consequently, I don't always have a winning trade. So that would be a reason for me not to take a trade. Second reason for me not to take a trade is that the price formed this level here, then went lower and formed this level here. And now I'm wondering, is the price going to do it a third time? Is it going to form another level here, for example, now by going lower, and so by not respecting this fair value gap? This is a question. And so if I had to actually enter a trade, let's say here, instead of placing my stop loss here, I would have to place my stop loss at the previous sell side liquidity level. And that transforms my trade from a 2.3 risk to reward ratio trade to let's say 1.4 risk to reward trade. And in that case, I'm like, okay, is it really worth it for me to enter the trade or not? Not for everybody is the same, and we don't always have the same like risk appetite. I'm going to tell you what I would personally do, which is I would not actually be entering this trade, because when I've seen this pattern of price taking out buy side liquidity and then consequently sell side liquidity right away, I'm not the most confident in trading. So I would actually not enter this trade. But for those of you that have entered this trade, I want to keep the trade just here set up, and let's play the price movement. So here we are inside the fair value gap on the 3 minutes time frame on Euro USD. We have placed our take profit, so our target at the previous level, which would be here or here, whatever you prefer. At the previous level, so the previous high from where the price is, the previous high is this one. And then we would take in place our stop if you decide to enter the trade either here on the candle that has formed the fair value gap or on the sell side liquidity level. So let's play, let's see what happens. Ooh, look at that. So if we had placed our stop here on the bottom of this candle, we would have been taken out. If we placed it at the previous sell side liquidity level, which I marked with here, or to be even more precise, it would have been here, but I always mark a little bit like rounding it up. Well, in that case that we would still be inside the trade, but we have a big bullish candle. So since we entered the trade, the price went higher, lower, and then lower again. So we would have been either taken out here, so it would have been a losing trade. But if you took your stop here, let's see what would happen. Okay, and if you placed and entered the trade here, and then you placed your stop loss at the sell side, then you would still be inside the trade. If you place your stop loss on these candles here, on the body of these candles, you would have been taking out. Depends also, guys, then on when you enter the trade. So these are the tricks that you see when you're actually backtesting a lot and when you are trading with a demo account. If you wait a little bit longer to enter the trade after, for example, the price has formed this low and retraced back, then your trade would have been a little bit more secure. But yet again, you should have placed your stop loss a little bit more generously. So keep that in mind. That said, I did not enter any trade. That's not my enterprise movements look like this. So just that you know. Let's keep playing. Let's see if there is something that could interest me in entering a trade. The price tapping back again into this fair value gap, but I can tell you for what I'm concerned, considering that the price has formed this bottom and then this bottom again, for me these are already two bottoms. And when I see two bottoms formed in sell side liquidity or buy side liquidity, one after the other, even if this one is lower, this is not the price movement that I want to see. I want to see clear. So I want to see the price forming a low, sell side liquidity low, going higher, then taking out this level, and then going really higher. And the move on which I want to capitalize is when the price is formed a high here and, for example, a fair value gap here. Then I want to enter when the price is going lower, tapping back into the fair value gap for the price to go even higher. So these last price movements are the ones on which I want to capitalize on. So this, the price tapping back into the fair value gap and then going higher. And I would place my trade looking something like this. Okay, so this would be what I want to do. This is like my strategy and my ideal scenario. So in this case, leaving out the entry, here you see there is a low, sell-side liquidity low, price tapping back, taking that level of sell-side liquidity and then going higher. Versus here we have something like this, and I'm not interested in that. I'm not interested in endless bottoms created by the price. So I will not be entering anymore here in this price movement. Let's keep watching together. Let's see what the price is doing. So look at it here. The price now has taken out the other sell-side liquidity level and is going higher. Okay, it's going higher. In this movement, and let me make it blue, the price has actually created a fair value gap and is also going higher, and it went higher than the previous level, than the previous high, which would be this one on the 3 minutes time frame. And my question for you guys is, would you enter this trade? Would you actually enter this trade now that the price is tapping back again into the fair value gap? What are your thoughts? Feel free to stop the video a moment, consider the price movements and also consider the time. So here we are at 3:36 a.m. New York local time on Monday the 8th of April. We have no news that specific day, so it could look good or it could look bad. But remember what the price has done before. Would you enter this second trade or not? Stop a moment and write it down in the comments below. And if you were to enter this trade, you would enter this trade again going long, so it would look like something like this. And either here you would place your stop loss or at the previous low, which would then be here. We have seen that before, that when we placed our stop loss here, the price took us out. So maybe you could place it here, I don't know, or at the previous sell side liquidity level. And in that case, it would be a 2 risk to reward ratio trade. You can of course place also your take profit just right here on these candles, but here would be like the ideal one. Now I can tell you one thing, that all if the price traces back into the fair value gap. If the price doesn't do that, then we actually don't have a trade, okay? We don't have an entry, we don't have a trade. The price can always, at any point in time, keep going higher, for example, and taking out buy side liquidity or simply taking out these highs. If that happens and the price doesn't trace back in the fair value gap, then remember, you don't have a trade. Now, personally, I would not take this trade. I would not take this trade because the price is not that interesting. It's just keeping and taking buy side liquidity level, then sell side again, then here forming a low. It's not a clean price pattern for what I'm concerned, so I would not be entering any trade here. But you tell me what you would prefer to do, and that's totally fine. Let's check together what the price has actually done for the remaining of that session. Ooh, look at that, guys. The price actually formed this fair value gap, left it there and went higher, which we said was one of the possibilities. Took out the previous level of buy side liquidity. For me, these are price movements that I do not personally trust. And so I would not even be looking at another trade here because it's 348, 350. We are approaching the time in which we stop trading and we stop looking for an entry. So let's just see what the price is doing, but I would not be trading anymore. The price tapping back into the previous fair value gap that has formed, taking out yet another level of sell side liquidity, and now it looks like it's going higher. Here formed two fair value gaps, a smaller one or a bigger one. And yes, I mean, we cannot be confident in what the price is going to be doing next. And also it's 4 AM New York local time, so our trading time is over. The time to enter trades is done. This is the moment in which I would simply stop and go and do something else. Not look at the charts anymore until the next session. So let me just play the price movements. Okay, let's double check the price movements. Let's place our... So we had the sell side liquidity of that day that got taken out. I'm gonna eliminate these vertical lines. And the new level of sell side liquidity is definitely here. This old level of sell side liquidity got taken away. Buy side liquidity as well. This level got taken away. And we have a completely new level of buy side liquidity. The previous level, so we had a high here, for example, and the price took out and formed a new level of buy side liquidity, as you can see here. So we had it here, taking out again. This is 9 AM, new level of buy side liquidity, new level of buy side liquidity, and now new level of buy side liquidity. If we look at the price movements on, for example, just 1 second, the 15 minutes time frame, we want to see what is the previous level of buy side liquidity. Like if we go from this level here higher, what would be the next level of buy side liquidity? And we would have it here. So it's pretty far away. Just to have an idea of how the price movements are looking like and how close or far away is the next level of buy side liquidity. Okay, so here guys, we had a fair value gap on the 15 minutes time frame that actually got taken out, so we can take it away or simply minimize it. It's not that important for us. This one fair value gap on the 1 hour time frame as well, and this one as well. So we keep the fair value gaps that are still interesting for us on the 15 minutes time frame, which we would have here. Okay, perfect. Now let's go on the 5 minutes time frame. We can see on the 5 minutes time frame the price formed a new high, and now I want to play the price movements on the 3 minutes time frame a little bit slower. So let's see what happens here. Notice the price went lower, formed a fair value gap. And if I look at it on the 1 minute time frame, it looks like something like this. Okay, so we indeed here have a small fair value gap. We have this level, price going lower and then taking out and forming a new level of buy side liquidity. Now, what's gonna happen next? Are we looking for an entry here or not? What do you think? Take a moment. Analyze the price movements on the 1 minute time frame and also on the 3 minutes time frame. And they look like this. So the price formed a high, retraced back into the fair value gap, went even higher, and now it's coming down. And it's our time to trade. And when you're ready, we're gonna keep going on. Okay, so let's play. Oh, look at that here. The price has indeed tapped back into the fair value gap, and now I replayed it way too fast, but our entry would have then be like something like this, like on top of this candle, with here probably our take profit. The problem with this trade, guys, and I want to highlight it to you, is that in this movement until here, we do have a fair value gap, but you know what else is missing? Until that moment, like until when the price taps back into the fair value gap, I would not have entered, because what I still need to see is the price taking out a previous low, and I don't see it until here. I see it here, so right now, yes, the price is taking out a previous low, even if it's just like very, very little, and I could consider entering, but until this moment, I would not have entered the trade. The price is going lower, and as you can see, after this, it has not given me yet the chance to retrace back again into the fair value gap, so I would not be trading. And right now is on a fair value gap on the 50 minutes time frame. Going even lower. And now it looks like it tapped back into the fair value gap, and now it's coming back higher. So I kind of have lost my momentum to enter the trade, because yes, here, but as we said, the price did not yet take out this level here. And so yes, it took out this level here, which on the 1 minute time frame would have been interesting. I mean, look at it here. So this is the fair value gap on the 3 minutes. If I go now on the 1 minute time frame, what I see is that the price made a new level, made a new high, went lower, and with this lower movement until here, the price did not take any low. The low is here. Then the price retraced, but it was too early, and after retracing, the price went lower than this. And so yeah, after that the price did not trace back into this fair value gap, which is the fair value gap that I can see on the 3 minutes time frame. So I would not have had a trade, I would not have had an entry that I'm confident and sure about, that I actually like, that is guaranteed almost to make me profit. So let's keep watching and let's see what the price is going to do next. Okay, the price tapped back into this fair value gap, and then it closed it, going higher. And took out again buy side liquidity level, forming a new high. So let's see what the price does next. The price is tapping back into this fair value gap on the 3 minutes time frame. But guys, remember, this is not something that I'm looking to capitalize. I'm not looking to place a long position here and for the price to go higher. Because in this movement, in the previous movement, the price did not take any level of liquidity here. So I'm not looking for the price to capitalize on this movement, if that happens at all. Remember, the price could always step back into this fair value gap and go lower. So we're not certain about price movements at this moment. The price took out this high again and yet again, and after tapping back into this fair value gap, so it looks like the price wants to keep going higher. But now it's already 10:55 almost, and we did not have a trade. So I'm gonna just keep looking at the last price movements for this session, but I actually, did not enter a trade, did not have anything that I liked enough to be trading, to be risking my money. Let's go to the next session. Okay, so here we are in the afternoon session, Silverbullet time for the ICT Mentorship 2022 strategy from 2 to 3 p.m. New York local time. We have seen some pretty impressive price moves on this Monday. Let's see what happens next. So here on the 50 minutes time frame, we had a couple of fair value gaps, which I'm gonna just sign here. The price just took out buy side liquidity, so I could be interested in trading. I could be interested in entering a trade. This is how it looks like on the 5 minutes time frame. And now let's go on the 3 minutes time frame. Okay, let's play slowly the price movements on the 3 minutes time frame. So as you can see, guys, here the price took out buy side liquidity. The previous level of buy side liquidity went lower, but in this movement it did not go lower than like this low here, and it did not form a fair value gap. And now it looks like it's going higher again. Yes, the price took out buy side liquidity yet again, so we have 1, 2, 3 buy side liquidity levels taking out, the price forming a fair value gap here, and when we look into the broader picture, we can see that the price definitely reacted from this fair value gap on the 15 minutes time frame, reacted out of it, and it's going lower, which doesn't mean it's not going to come lower. It just means that it recharged here to take out these buy side liquidity levels. Okay, this looks like finally like the top, and it's happening at 227, so that's still okay for me. Looks like that the price is forming here a fair value gap. We still, to be certain that this is a fair value gap, need to have this candle closing. So this is like a provisory fair value gap. Here it looks like that the price is going lower than this candle as well. And if we look at it on the 1 minute time frame, here we can see that this is the previous low and the price took it out in this movement. So I could be interested in entering this fair value gap for the price to go lower. And I would do something like this probably. Either this level or at the fair value gap mark. Let's go back to the 3 minutes time frame. So I'm telling you guys, I could be interested in entering here and going lower, because this is what we are done doing, believing that the price would actually go lower. We can place our stop loss here or here, a little bit higher than the fair value gap. But tell me, what would you do? Would you actually enter this trade? Yes or no? If we have a trade, if the price traces back into the fair value gap, would you enter this trade? Would you enter this trade hoping that the price is then going to go lower or no? What's your analysis? Take a moment, analyze the price movements, look at bigger picture as well, stop the video if necessary, and tell me what would you do. I can tell you this, and I'm gonna share with you my opinion, what I would actually do when I'm trading. I like that the price took out buy side liquidity level once, twice, now third time. This is actually the stronger top that we have. This movement is clean. We have taken out a previous level and we have a fair value gap being formed. In this case, I believe that I would enter the trade. I would place my stop loss at this level. Actually, I would not place it close to the fair value gap, because it's basically the same candle on the 3 minutes time frame that is formed the fair value gap and that is taken away from the top. So I usually like then to place my stop loss here, and I would place my take profit, I believe, here on the fair value gap on the 50 minutes time frame. This fair value gap, I don't know if it's strong enough. I would definitely pay attention to how the price reacts off of it, and if necessary, exit earlier. But my take profit would be here, right at the entry of the fair value gap. And yes, let's see if we actually have an entry. I'm gonna slow down even the price movements on the 1 minute, on the 3 minutes time frame. And we would have an entry here if we were fast enough. So basically here we would have an entry. Look at this here, the price is tapping back, slowly coming back, maybe into the fair value gap. So let's see how the price behaves, because it definitely reacted off of this fair value gap. And for majority of you, this would have been your entry. So not here, but actually here, when the price tapped back into the fair value gap. I think and I believe that at this point I would have gone on the 1 minute time frame. Here it goes, our second possibility to enter the trade inside this mini fair value gap that's pink on the 1 minute time frame. Whoa! And with only one candle on the 3 minutes, the price would have taken out my take profit. And so, as you can see, the price really respected this fair value gap, went lower and took out the first next low or high. In this case, we had a low, which was here, right at the fair value gap. And we would have had a trade with a 3 risk to reward ratio. And let's see what the price would have done next. The price would have retraced back into the fair value gap even deeper, really in the middle of the 15 minutes, almost in the middle of the 15 minutes time frame fair value gap, and then it would have started to go higher for what we can see during the silver bullet times. But if I speed up a little bit, the price tapped back into this fair value gap as it looks like, and it's now looks like going lower. Just quickly, so this would have been our trade from this fair value gap going lower into the next low, which was here, right at the beginning of this fair value gap on the 15 minutes time frame. And this would have been the only trade that I would take on the 8th of April 2024, Silver Bullet times, reviewing the ICT Mentorship 2022 strategy. I hope these videos are useful for you and they are really teaching you how to behave when you're looking at the price movements using the ICT Mentorship 2022 strategy. And I'm gonna see you here in the next one.